Good evening, Doc Severson here for the Ready Set Crypto Omnia trade of the day for Thursday, the 27th of January. 2 points that I want to make with you here today. It's not really worth going through the rest of the charts today, although we can come up with a couple of levels. First of all, we have BTC versus the US dollar. We have a couple of decision boxes here that have been stretched out. We're very close to, remember I talked about the fact that 40,000 was going to be difficult to pierce from below. This is going to be overhead resistance. We got pretty close to there yesterday and it faded back down pretty heavily. So we can look at this and say any break above here, although I think that 40,000 is going to be out of range on the first try out. I just don't see the price getting above 40,000. I see it hitting its head here and maybe coming back down. Or a breakdown below 33 is going to be bearish. So that's our decision box. If we go over to Ethereum, we're going to see the same kind of thing here. Based on the volume profile, the price is hanging out at that volume profile area, high volume node for right now. So here it is. Our decision box is just below 2,200 up to just below 2,800, about 2,750 or so is yesterday's high. Was not able to make it up to the swing test, which we talked about, is just below 3,000. So it got close to there, but not close enough. Again, if the price is able to break out above this box, I think it's going to bonk its head at 3,000 from below and drop down from there, maybe to a higher low. That would be fine. And then we'll see if it wants to do something like this. Okay, now I've got 2 points I want to share with you here today, and this is going to be true regardless of what asset that you're trading, regardless of what financial market that you're looking at. This is due to human nature and the way that price moves due to human nature and the fact that we all have these limbic systems in our skulls, which create these conditions that we're really not really generated for, right? We're all programmed the wrong way to trade because we've been programmed on how to save ourselves in the jungle. You guys have all heard the fight or flight reflex. So you're either going to stand your ground and fight somebody, or you're just going to turn around and run away. Fight or flight is programmed into our brains right now. And understanding that fight or flight does not work with financial markets, does not work at all. So how does it work with financial markets? First concept I want to share with you here is that the worst selling will always occur at the very bottom of a move. The worst selling and the strongest volume will always occur at the very bottom of a move. This is also what we call capitulation. This is where people finally fold their hand and say, that's it, I quit. There's no hope for me in this asset. I quit. I can't take this anymore. Have we reached that point yet? Oh, it's close. And it's starting to, you can see that this was nice and quiet on the way down. And then it started to really get worse and worse and worse. Is this worse enough? That I don't know yet, but we will find out that the worst selling will be always at the very bottom of a move. We can see the worst selling here occurred back in May, and that was about it before this thing finally reversed. The worst selling here back in September was pretty strong before it reversed. The worst selling will always occur right before we have a relief rally. So could we get a little bit worse? Yeah, it looks like we may be headed for the 1800 level, which is the point of control here for this entire chart over the last several months. So we could see a little bit more to the downside, and the worst selling will occur as it reaches down there. This is where people will say, that's it, I quit. Even long-term holders will sell out of this. So that's number one. Number two is that the worse the bottom is, the stronger the relief rally will be. The worse the bottom is, and this one was particularly bad. Let's just go over to price alone on, in this case, this is Ethereum. This was a particularly bad bottom here where we had, it was like a triple bottom. We had undercuts and everything like that. Everybody had given up on this and it looked particularly horrible. Also, we were looking at a death cross. And then, I mean, it doesn't get much worse than this. It looked like we were about to jump over the abyss here at 1800. And then we had an incredible rally from there all the way up to 4,000, and 4,800. So the worst selling occurred at the bottom. And the worse that the bottom is, the worse the volatility is, the more despair that traders have at the bottom, the stronger the relief rally will be. So you might want to look at this and say, you know what? This is almost as bad as it gets looking at every other move that we've had here. The worst selling is occurring at the bottom, or at least the bottom of this move so far. And what could make this worse than that? Well, to me, what would make this worse would be some kind of relief rally up and then another plunge back down to around this 1800 area that we talked about as the point of control. So this to me would be the worst thing that could happen, would be a false relief rally, giving people false hope and then completely shattering their dreams by dropping down to 1800 again. This would, I think, get a lot of people out there to say, I can't do this anymore. And that to me would be the magic recipe for this thing to finally capitulate and generate an enormous bottom move here, which could generate a huge rally back up again in just about every asset. So whether or not it's Ethereum or whether it's Bitcoin, you can see that the selling is starting to accelerate as we get closer and closer to this magic 30,000 level. Same thing here is with Bitcoin. The worst thing that could happen is we rally back up, we fail at 40,000, and then the enormous disappointment as we drop 10,000 points literally in a day would be very similar to that. Again, it did not get much worse here than mid-August when it looked like we were just falling off the cliff. And then that's where the rally came from. So again, two things. The worst selling happens at the bottom, number one. Number two, the worse the bottom is, the more desperate the traders are, the better that bottom will be about generating an eventual relief rally. That's called capitulation. So let's look for the bad times, believe it or not. The bad times will be just before the sun comes up. That's it for today's report. Hope that helps. We'll see you this weekend on Sunday morning for the weekend wrap up.